Jodi, our Buckeyes got it done Saturday night, kind of an old school game. Who expected that low scoring? Not many people, but fun win.
Yeah, for sure. I was nervous there for a while. I like when Vegas is right, and it'd be nice to cover the spread. Then I wouldn't have so many heart attacks.
Right, right. Because, the Buckeyes were big, I think 17 and a half point favorites. It was a big
Mhm.
part of the narrative leading into the game, and Notre Dame's
Yeah,
coach used it. And they were up by 11 late. I didn't personally bet on the game, but
yeah, yeah,
the one more touchdown at the end would have been significant for a lot of Buckeye backers.
yeah, yeah. We'll take the win, but you gotta love the fight in the underdog. So it was a good game.
Great game. Absolutely. So happy Tuesday, everyone. Rich Swerbinsky with the Mortgage Collaborative here once again with the last week in Mortgage Today, where we roll through the week that was in the mortgage industry, looking to really recap all the most pertinent things that have happened in the industry for our members and listeners and viewers. And each week, I am pleased to have one of our lender members join me as my co-host, and a person that's got to be the record holder for most last week in Mortgage Today co-host slots. Good friend, great industry leader, the president of Nationwide Mortgage Bankers, Jodi Hall. Jodi, great to see you.
Good to see you too. Long time no see. I feel like this last week, though, has been a little less of a news cycle than some of my past appearances, where I felt like we were creating news so that we could try to unwind it on the Tuesday following.
I have to admit, every time you co-host Last Week in Mortgage, there's some massive news that breaks. So I have to admit, last Friday, everybody wants to release news on Fridays going into holiday weekend, so it gets buried.
Yep,
I was just completely expecting something just horrible for our industry,
yep,
but thank
yep.
God we didn't get it, and
No,
nothing
no.
overtly negative and new to speak about this week.
Right,
So
for sure. I think the biggest update last week is I think a lot of the of our vendors released updates rolling over from the end of August to the 1st of September, causing all kinds of issues like Equifax not running credit. It seemed like a lot of the vendors that we use, there were breakdowns, but it quickly recovered. So relatively uneventful.
definitely one thing I don't miss from being in the lender seat directly on a day-to-day basis, those system updates and end of the month madness. How has that been though in general? Like, I know, when Encompass was quickly growing and quickly growing market share, they were needing to make lots of updates to their
Mhm.
system that were causing varying levels of pain across the
Yep.
member base. How has that issue been just in general, more broadly, the last year or two?
I don't think that there's been a lot of disruption when updates are going into place. Maybe we got a little bit better with the technology. Maybe also we we started to expect it to be so horrific that if there's only one glitch, that we feel like it was uneventful. So I think part of it is just we've we have come to expect things. So when they're not as awful, they seem better. So I think that's part of it. And I just think that companies in general have become much better at releases, both on the vendor side and also on the lender side, of reading what things are going to change and what the impacts could potentially be, and then having the team prepared to dive in and fix things if they do break. So I haven't really noticed it that much in the last couple of years, any major disruption.
Thanks for the feedback. And as you noted, kind of a slow, big news week. The last week, some things looking forward to getting into with you. I think the biggest narrative, it just continues to kind of be the rate climate and everything going on with the Federal Reserve and interest rate policy. It's dominating a lot of the talk and the headlines in our industry for all the obvious reasons. Got a big jobs report last Friday. It was actually the jobs report that people that want the markets to do better wanted,
Mm.
like
Yep.
not bad, but not like popping white hot jobs report. Stocks get out of the gate quick, bonds get out of the gate quick. They're both rallying, and then it kind of fizzles off. And into this week, no better. And
Yep.
I think it's what I read in a column that I read this morning was the way that the markets are kind of viewing the investors are viewing the market right now is like hope for the best, but expect the worst. And I think that's what we're kind of seeing right now at the bond market. The news and the numbers these last few weeks have been positive for inflation.
Yep.
Yet we've seen rates and bonds sell off. And it's, I think, just that fear factor that's kind of lingering out there.
Yeah, we've been talking about this all year, and I think it's an emotional reaction, right? Like it's not a predictive reaction to what markets will do. There's this emotional component, and I think it's largely due to the cycles seem to be faster because we get information more that's more readily available. We're constantly getting the alerts on your phone, on your computer about what's happening in the markets, and I think it causes more of a emotional reaction, which is kind of spiked. And I think that that's what we're seeing again. We saw it before the last rate hike. And I think largely, it's funny, weren't you talking about a soft landing on Friday?
Yeah. Yeah. So much for that.
Yeah,
Gosh.
like you
Yeah.
can't predict anything. Like nothing makes sense. So I think it's just an emotional reaction. I think everything will settle back down.
It really is. I mean, markets trade off expectations and emotions. If it's the stock market or the bond
Mhm.
market that determines interest rates in general, but right now even more so, because of how hot inflation has got, and it's, it has impacted our economy, but like not as badly impacted consumer spending, and
Mhm.
as a related result, jobs in America is nearly as bad as anybody had expected. But I think people are kind of hoping that what lies ahead is not what people thought might have
Yeah.
come already.
Yeah, it's interesting. We were exchanging information today. I mean, if the jobs market is the only thing that is keeping us from being in a recession, if you live your life with mortgage goggles, it's really hard to believe that there isn't job loss and we aren't in a recession. I mean, it's crazy that to see just on a daily basis the number of lenders that are closing up shop or laying off thousands of people. So it's definitely the tale of industries right now, and it sure does feel like we're in a recession if you just look through it as the eyes of a mortgage lender.
This is the last week in Mortgage Today. I'm Rich Swerbinsky this week, joined by the president of Nationwide Mortgage Bankers, Jodi Hall. Any questions, comments, thoughts anybody in our live audience has, please feel free to incorporate them into the chat and the Q&A, and we will incorporate it into the show. And if you're listening on podcast, where the majority of you listen, just a reminder, join our live broadcast on Zoom every Tuesday at 2 p.m. Eastern. You go to mortgagecollaborative.com. You can register for that live version. And Jodi, one of the columns we were kind of going back and forth and discussing was a piece that was put out this weekend by the New York Times, and it was a really interesting piece that it spoke to instances of three or four different affordable housing related developments in the state of Connecticut. The column goes on to, kind of paint the picture that these instances in Connecticut could be a bellwether for things we'll be hearing and seeing more broadly across the country for the rest of the year. And it was typical tales we've talked about on this show and others. One instance where the people in Fairfield, Connecticut, about 2,500 residents, got together, signed an online petition not to rezone, to put affordable housing units in their town. Another town in Connecticut where a major developer pulled out of a major affordable housing project because of a lot of public pressure and a legal lawsuit that had been going on for years and years. And then in a third town, a civil rights lawsuit, again in Connecticut, the people that brought the suit alleging that the zoning and housing laws in their municipality is racist and really disadvantageous to minorities. So it's some interesting things that are starting to happen. And we've talked about this before. The Biden administration, as part of their affordable housing supply plan, smartly, they dangled out some Department of Transportation dollars, like basically said, hey, if you rezone your municipality to allow for more affordable housing units, you'll be prioritized on ODOT dollars. I think we're starting to see that happen now because you're starting to hear more of these stories pop up about the real world implications of trying to get it through.
Right. Yeah, we talked about this, I believe, earlier in the year about, people want to see, in theory, they want affordable housing for all Americans. But when it comes down to some communities that are not going, they're going to do whatever they can because it's like fine to have affordable housing as long as it doesn't impact me. What is that going to do to the value of my home? What is that going to due to the community that we live in? And there's this negative stigma that is causing, people to want there to be affordable housing, but not within their markets. And I think that we'll continue to see more of that. I think the answer is we just have to build more homes. We need supply chains to open up, whether that's that we, completely take off any tariffs on import of softwoods from Canada, whatever it may be, to make and incentivize builders to want to build homes that are less than $400,000 or $500,000 homes. And then we have to solve it on the lending side too, so that more Americans qualify for home mortgages. Because I think that we're going to continue to see that play out across the United States, where it's going to be, affordable housing as long as it isn't going to impact me.
It's tough. You summarized it very well. I have nothing to add there. And I think they're trying to do some things now that are in good spirit to help with the affordable housing issue in America. But just the predictable headwinds that we kind of talked about when these things were announced, I don't see any way the whole inventory and affordable. I think, and I get it. They don't want to like incent builders heavily to build homes that are, I don't see another like, ultimately, I think you got to they're the experts at, unless the US government wants to get into the home construction business. We've seen that proposed. I've read columns on that multiple. But you could argue that if nothing is done about the housing inventory issue in America, especially at the lower end, that the government could be forced to do that eventually. We don't want that to happen. But it's just it's a very nuanced issue. And we talk about it almost every week. And, we have some ideas we feel like would work from those of us in the industry, but it's the getting it done part and the DC part.
Yep, for sure. And it seems like, we one of the things that came through Fannie Mae, now you can create your own down payment assistance program, but to do that on an independent mortgage banker's side of it requires so much compliance and oversight and teams that when you're in a crunching market that you don't have access to. So it takes longer for us to make that come to fruition for clients. So I don't know what the answer is. It's what you can control, and what we can control as independent mortgage bankers is looking for ways to create affordable home loans for borrowers, and hope that the inventory kind of comes back. At least we have seen a decrease in home prices, and there are many more homes that are being purchased at or below what the asking price is, which is a change. So maybe some of our home buyers will start qualifying, but as interest rates continue to go up and every other price, we were talking about disaster insurance, but for the cost of homes, like the cost of everything is going up. So, and we don't see it impacting the higher income. Did you see Lululemon is like $314 a share? So, I mean, that's indicative of, the richer Americans are still spending. And I think that we feel less of an effect because it's not impacting, near recession is not impacting, and inflation is not impacting 100% of Americans. So it's interesting times that we live in.
So true, so well said. And I think you're so right that the reason that I think the country is more like right now, you have people very divided, people that are paid to have opinions on things like this. Are we in a recession, headed to a recession? Like, yes, no, maybe. There's more division on that, more so, at least to me, than in other times like this where there's been question. Because you're right. I think people at the high end, like there are people doing well that are like recession. Well, like I'm doing great. Like like that component, but at the low end, especially related to inflation, is really, really starting to impact people at the low end.
Mhm.
You kind of hinted on this, and yes, so if you're, a young person that wants to buy a home, you're already limited on the inventory side. Rates are high, values are, up. But then there's also the stuff that it takes to own a home:
Right.
taxes, insurance, taking care of the lawn, fixing crap that breaks.
Yep.
Like the cost of all that is up too, in addition
Yep.
to the barrier to get in the home from an affordability standpoint.
Yeah, for sure. With Danielle turning into a hurricane as opposed to a tropical storm, there over the weekend there was a lot of information on the rising disaster insurance prices, and on average is 12.1% increase in disaster insurance over what it was last year. And with that being significantly higher in areas like Miami, that, $4,000 to $5,000 more this year for flood insurance than flood insurance last year. And, who can afford $700 to $800 more per month just for disaster insurance? So I'm using it to drive up home values in the Midwest, and we don't have to worry about hurricanes, a random tornado here and there, not a lot of wildfires. Definitely not going to have any wildfires after the 3 days of rain over the Labor Day weekend in Ohio. But, all joking aside, it's like I sent this to you, and definitely interesting. It's called riskfactor.com, where potential home buyers in areas can look at the risk factor. So Brecksville, Ohio, 1 out of 10 on the risk factor for disaster. So the Midwest is where it's at.
It's, well, we've seen some geographical shifts due to the pandemic, and now you're starting to see the stories on the other end, like, again, the sensationalistic headline people, like, oh, now that housing market is crashing, home values up 15% year over year, crashing housing market. Like, these are the city, so you're starting to see some of that stuff. But going back to the insurance piece, you talk about like hidden taxes and costs of home ownership. That's a huge one. I think you mentioned, disaster insurance was up 12% year over year. I got a buddy in that insurance field, and he says, he told me the same thing recently. He said, I'll tell you what, he's like, in all homeowners insurance prices are going, like, I'm watching them go up
Yep.
almost daily, and for sure weekly, as I'm quoting them out to people. So another aspect, inflation related housing costs.
Yep. Yeah. And last year was the highest number of disaster claims since 2017, which was Hurricane Irma, Harvey, and one other. So definitely it's impacting all of us, because it's being also spread out for those who aren't in disaster areas as well.
This is the last week in Mortgage Today. I'm Rich Swerbinsky with the Mortgage Collaborative. This week joined by the president of Nationwide Mortgage Bankers, Jodi Hall. Jodi, you alluded to this earlier in the show, but a positive report from Realtor.com last week on just home listing prices in general dropped from 449 on average nationally in July to 435,000. A pretty big drop. It was the most significant. Okay, things are starting to kind of flatten out, and I see, some promise on the horizon number, at least for me, that I had seen in a while. You also mentioned, you alluded to it as well. We also had 20% of listings in July drop the price. That was the biggest number from a percentage standpoint in a while. So some positive signs as it relates to things starting to get more normal on just the supply and demand side.
The bubble is definitely not bursting, but definitely, helps the emotion of the home buyer. But that too, when you have those positive outlooks, you also put more home buyers like, well, maybe I should look again. Maybe I should come off of the bench. So I still think that our supply is going to fall well short of what the demand is. We generally see housing slow a little bit around the time that kids go back to school. we might get a little bit of a run into the winter, and then we see it start to come back down. So I learned something last week. Did you know that February is a good time to sell your home in Cleveland because of pent up demand over the winter?
Really? I did
I
not know.
thought it was May, but I had a
Yeah.
realtor tell me that. And I was like, well, then maybe I'll leave my house. I'll wait and put my house on the market into January.
February is we can both test in Cleveland. You're so ready to be like ready for
Maybe
anything. Yeah.
maybe pent up demand to buy in Florida or South Carolina.
Oh, too
I
funny.
should have fact checked her.
You joked about this, the housing bubble. People remember like 9, 10 months ago, all the housing bubble. Oh, we're headed towards a bubble. If you would have told the bubble people 10 months ago that 30-year fixed rates were going to be like 6.5, and that home values still would be, going up
Yeah.
until August, that, they would have said, oh, the bubble is on for sure. But every home, it doesn't matter what the rate, like also in that realtor.com report, average home still sold in 14 days. So
Yeah.
homes that are being listed are selling, and there's some flawed homes that are in that mix.
Right.
I mean, it's not,
Right.
that's the average.
Yeah, they missed that whole demand versus supply point in housing, and it's there aren't enough homes. That's the bottom line. So it is, people aren't just going to stop looking to purchase homes, especially when we've continued to see rent wars. Like, what the heck? Who gets over what they ask for a rent price? So we continue to see that increase in demand.
Really putting on a squeeze on people that need to find housing. People that are lucky, they can do something temporary, or, are already in a good situation. But every single day, there's just tens of thousands of Americans that have a new need that arises for housing. A lot of them affordable, and just not a lot of solutions for those Americans right now, nor help on the horizon. So one of the parts of the overall solution could be, we talked about this a little bit on the rundown last Friday, but the Federal Home Loan Bank System in America, FHFA, also we know they oversee Fannie and Freddie. We talk about it ad nauseum. They also oversee the Federal Home Loan Bank System. In a nutshell, it's, I think, 13 different federal home loan banks across America that operate independently, but under the kind of same umbrella. It currently really only provides solutions for like community banks, typically smaller, medium-sized community banks. But FHFA announces they had just started a comprehensive review of the Federal Home Loan Bank System, something Sandy T had alluded to early in her term. Sounds like they're getting to it. Nothing but a good thing. We know Sandra Thompson from getting a chance to speak with her a bunch of times. She cares. Her ear is to the ground. She's trying to do the best she can in a very tough situation. So your thoughts on that news last week?
I think they're doing what we as lenders are doing, right? We're putting more tools, we're giving people more tools in the tool belt. So I think that this gives us an opportunity as an independent mortgage banker to have more tools and to have more selling options. So yeah, I do believe that it is positive. And I think that, that's really all of our way out, right? Even if it's nothing more than that psychological light at the end of the tunnel, that we can keep everyone positive and moving forward. We do the same thing with our loan officers on a daily basis. And I didn't know I won't tell you what year I graduated from college, but I didn't know then that my psychology degree was going to come in so handy.
Little did you know how much you'd be using that degree as you got into finance. You probably thought at the beginning, what a waste of all those years of psych classes, and now it's likely your most valued schooling. So
yeah, for sure. But I think that more than anything, it's just positive to give us more tools as lenders.
Awesome. And there's a Federal Home Loan Bank in Chicago where TMC will be in about 2.5 weeks for upcoming conference. And as one of our fan favorites in the network, tapped on you, Jodi, to interview. Got a very special keynote, Susan Scher, who is a very deep-rooted Chicago politician. We all know the stories of Chicago politics. She was the controller financially for the city for a bunch of years and was a top advisor to the Obama administration, served as Michelle's chief of staff for some years, and real excited to get her inside look at what life in the White House is like and just some inside baseball in Chicago politics. So thank you once again for agreeing to interview her.
I'm excited. I appreciate the opportunity. I think in reading her career, it's been a storied career, but at the same time, it doesn't look like she's done yet. Still very young and has a lot more to give. And it's excited to see where her career is going to continue to go. So I look forward to talking to her and learning from her.
Very cool. And now Tuesday morning, she's going to lead into presentation that Chris Herbert from the Harvard Joint Center of Housing is going to give on some of the demographic changes, housing in America, and a panel on inventory in America. So an exciting Tuesday morning at TMC Chicago coming up here in 2.5 weeks. So got a few minutes left, Jodi. Obviously, we've seen a lot of consolidation in the industry this year. No surprise there. And feels like it's really happening on the broker and the wholesale side, even more so than kind of the banker side. And the Michigan trio of wholesale lenders that sits 1, 2, and 3, UWM and Home Point Rocket, just all really aggressive in different ways and trying to grow market share. It's been, just down the road from us, stayed over, but it's been interesting theater this last year and a half.
Yeah, for sure. It's like they're buying the market, waiting for those interest rates to drop to have the next big boom. And the question is, how quickly is that going to come, and who can survive until then? And I think that we're seeing a lot of the smaller wholesale lenders aren't going to be able to hang on until they do have that boom. So I think that we're going to continue to see a lot more people just throwing in the towel. I was talking to another industry veteran this morning, and we were talking about, some of the independent mortgage banks that have single owners or aging owners, and they've taken money out of the company, and in order to keep the company afloat, they have to put the money back in, but they're at that age like, well, if I do that, why don't I just retire? So I think that we're going to continue to see it on the lender side as well. People just saying, people that were thinking the beginning of the year that they're going to sell, the conversations look more like, just take my company and keep my employees. So, and I'm hanging up the towel. So it is interesting what is going on and who's positioned to continue to grow market share on the lender side as well as the wholesale side. But definitely very interesting times. And, going into the pandemic, we all said that we wish we would have focused on our technology and been able to handle more of the business without having to ramp up hiring so quickly. It's going to happen again. So I think the survival is going to be those who are able to deploy the technology the fastest and most efficient to be able to handle the next wave and set themselves up to be sustainable, where they don't constantly have to grow and let go.
Incredibly well said, and a great way to take us home. Some words of wisdom from one of our favorites, President Nationwide Mortgage Bankers, Jodi Hall. Jodi, looking forward to seeing you in a couple weeks in Chicago. And thank you so much for agreeing to co-host the Last Week in Mortgage Today again this week.
For sure. Thank you for having me, and we'll have a few cocktails and a few pies.
Absolutely, without a doubt. And to our attendees, thanks as always for taking 30 minutes of your week out with us. The goal is to make this savings of your time each week to kind of keep you plugged in on the things kind of going on outside your silo. So we appreciate your attendance. So as always, we'll be back every Tuesday live, 2 p.m. Eastern, with the Last Week in Mortgage Today, and on podcast and on TMC Connect, where you find us there, and on YouTube. So until next Tuesday, have a great rest of the week, everyone. Thanks again, Jodi.
Thanks, Rich. See you.